Good afternoon, everybody, and welcome to another edition of ChartWatch Live. My name is Capolingua. I'm from Market Index and Livewire Markets, and it is a pleasure to be joining with you today to discuss, to discuss what you want to talk about. We're going to take your requests. It could be stocks, could be commodities, could be indices, and I'm going to do my best technical analysis on those requests, and hopefully you'll learn a little bit along the way. But before we do that, we're going to do our portfolio risk management, and for that we're going to head over to the AMI broker screen and kick off with the Nasdaq composite. There it is, and oh wow, what an amazing chart, ladies and gentlemen. You couldn't ask for a better example of what demand side control looks like, apart from that candle, isn't it? And it certainly gave me a nervous moment or two. Of course, I'm talking about my ChartWatch Markets articles, which I write for Market Index. Head to the website and you can read those, where we did not that we changed our risk management level, which I'm going to talk about in a second, but it gave us a little bit of cause for a pause. But as is more often than not the case, capital M, capital O, capital T, capital N, the bull market tends to prevail, doesn't it? And that's what we've seen here. I'd like you, if you can get in your Q&A window, point out an analyst who you regularly read the work of who has called this better than me. So this is where I'm going to take a little bit of credit on this one and say that I don't think anybody's called this one as good as I have. And is that because I know more about the macroeconomics or what's going on with US trade policy or anything that's going on in the world? And it's not. It's pretty simple for me. I look at the light green ribbon. I look at the dark green ribbon. I note that the price action, that is the peaks, the A-shaped bits and the V-shaped bits, are going in the right direction. The candles, the candles are all important, aren't they? Tend to be mostly demand side oriented. And we've been at full risk position, or I have certainly, in the Market Index ChartWatch analysis. I want to say on that day there, go back, check the articles, would have been a day where we started to increase our risk. So we started to decrease our risk. Or it wasn't that day, but it wasn't far after that the risk started to come down. Certainly it would have been that day there, reducing risk through here. And this is total portfolio exposure if you happen to be trading US shares. We'll get to the Australian one in a second, but this is conceptually very important. And we often look to the US to potentially dictate what might be happening here in advance. And then started to add risk back. No doubt we're adding risk back on that day. Certainly on that day there, because we're now treating the short-term uptrend ribbon as an area of dynamic demand, and therefore also the long-term uptrend ribbon. And I reckon we're fully FRP, full risk position, somewhere around there, or maybe earlier. And I know this because I have a system. I have a consistent model of a way of doing things based upon my trend following model. So these things must be true. But of course, go back and check. And then FRP all the way through here and to today. So that is where we're at. Let's head over to the Aussie market. And I know you might not be trading US shares, Carl. That's completely useless to me. I know, but again, we're focusing on the concepts here and learning how to do it for the chart that you do want to do your analysis on. The Aussie market, oh my gosh. What can I say, ladies and gentlemen, about the old tin pot? You might be wondering, if you've just started reading my work, why do I keep referring to the Aussie market as the old tin pot? It is a bit of an old tin pot. A few banks, a few resources, Wesfarmers, Telstra and CSL. Maybe we can't even mention CSL in that group anymore. And we tend to be favoured by global fund managers at very specific times in the economic cycle. And when everything else is going gangbusters, it's not usually that time, because everything else just looks so much better than the old tin pot. A time when we tend to do well is when there's a high demand for resources stocks, because we certainly have those, or investors are getting a little bit defensive and they go and hide out in our banks, which are pretty stable, government backed, and have a decent yield, and or our currency's rising, but that tends to be resource related as well. In the meantime, we tend to do the old tin pot, and that's what we're doing over the last few days. We haven't responded to those big moves in US stocks, and European stocks are rising, Asian stocks are rising as well, and here we are. But that also doesn't mean we're going to change our risk position here, or my risk position. I have to be very careful, because this is always general advice, and this is always about what I do, and then what you do is up to you. But FRP is the summary there. So I like to get this out of the way because it frames the rest of our analysis for the day. How much of my overall portfolio can we have at risk? Let us get to your requests. I'm going to start with the offline requests first. And the first one is coming from John, who has a general question and then a specific one. The general question is about trend ribbons, and maybe we'll go to Medicus and a general discussion of how the trend ribbons work. And if you would like the trend ribbons, that is possible. I'll tell you how to do it, how to get access to my trend ribbons in TradingView. It's the only place I do supply them. I'll tell you at the end of the recording. They're based on moving averages. So that's not very complicated, but picking the right durations of moving averages that work consistently over a wide range of securities, over a wide range of market conditions, over various periodicities. That's the hard part. And that's the bit that takes, I want to say, many years or even decades to perfect. I'm not saying I've perfected it, but I reckon I've come pretty darn close. And if you've been using my ribbons, I think you'll agree with that, that in the short term, the price tends to be supported, and that's what we're looking at here. A lot of people use moving averages for telling you what the direction of the trend is, and certainly that's part of it. But for me, it's finding the right combination of those moving averages that find where the price tends to pull back to and then is supported by those ribbons in the short term. The short term tells you what the short term traders are doing, and in the long term tells you what the long term traders are doing. And I like to think when the short term traders and the long term traders are thinking roughly the same thing, then I'll have the greatest possibility of if I follow them, having a good result more often than not. So that's it. Now we can see, and the reason why I'm hanging on the weekly chart is we can see that they work just as well. They work just as well. The price pulls back to the dark green ribbon, the long, and it bounces. Why does it do that? I don't know, ladies and gentlemen. It just does. Many of us, I was going to say, we all drive cars with internal combustion engines. I can't say that anymore. You can tell I've been using that line for a while. But even if you've got a Tesla, do you really know how all the bits and pieces work to make you go forwards or backwards? Not really, but you can still drive the damn thing, can't you? Well, it's the same as the ribbons. Why are the ribbons so darn good? I don't know, and I don't care. They just are. Now, are they perfect? No, they're not perfect. And here's a good example of them cutting through the ribbons and then moving back up. But even then, we still had some pretty good warning from the ribbons that things weren't right from the short-term trend ribbon, because the short-term trend ribbon here is supporting that price. Yes, direction is good, but direction only helps me when I'm flicking through a long list of potential candidates. If I see the double greens, I know I need to spend a bit more time. If I see double pinks, well, that might be a short. Or if I'm looking for longs, I don't need to spend a lot of time. But it's the way they act as dynamic support and resistance is what I'm really looking at here. And when we start to get beneath them, that's when bad things start to happen more often than not. All right, we see changing colours. We start to trade beneath them. They stop doing their job of acting as dynamic demand. In this case, and we'll get to a downtrend, or actually we can talk about it now. When they do change, we tend to find that that is when they go from an uptrend to a downtrend, we tend to find they start acting as zones of dynamic resistance or excess supply, as I prefer to say, because what is resistance? It's excess supply. You'll note, ladies and gentlemen, I tend to speak only in terms of demand and supply because that is my belief that only demand and supply matters in the markets, because that's ultimately how price is determined. So we've got some problems here. This is bringing it back now to PME. And we can see here also we had the break here, and then we had some problems here with the dynamic supply. The other problem is we're starting to interact with the long-term trend ribbon as well, and we like to see the price bouncing off that. If it doesn't, we've got to look at our price action, our candles, to see if we can, quote-unquote, try and save this situation. But this situation is looking less and less likely that it can be saved from a technical perspective. And everything I talk to you about in these next 45 minutes it's all about purely supply, demand equals price, and it has nothing to do with the fundamentals. So if you go and do some research on PME's fundamentals and you love the fundamentals, then absolutely, by all means, act upon those. Ignore what I have to say. But I think you've come here because you're looking for a slightly different way of doing things, whether you want to convert completely over to the technicals or you just want to use them to augment what you're doing, and that's wonderful. So my view is the charts, and I encourage you to go and work out the other view. So if I say, well, I don't think, for me personally, I'd be adding any risk to Pro Medicus anymore, or I'd have a zero risk position. That's completely my view. And that's where I am with Pro Medicus. And this is a little bit, it's blasphemy, isn't it? Because Pro Medicus has been the best stock really on the ASX for years now, or it's been very, very up there. And certainly if you look at my ChartWatch scans, and I can tell you here exactly, if I type in Pro Medicus, this is offline, you can't see it, but I can tell you that 42 times, and don't forget ChartWatch ASX Scans only started in May 2024, and I can tell you on 6th of June it went in, and then it went in on the 12th of June, then it went on the 13th of June, and so on and so forth. It went in 42 times. 42 times. In this run through here, then obviously it wouldn't have gone in through there, then it started to go in sort of here and through there. So 42 times. So very well frequented. Now, the last time that Pro Medicus was in the ChartWatch scans was the 14th of August. What does that tell you? So we have to go all the way back to the 14th of August and find where that is. So back here, that one, that day there. Okay, so that was that big white candle, and I felt, well, it's bouncing, potentially bouncing off the long-term uptrend ribbon, and therefore it deserves, with that big white candle, it deserves keeping the faith and another go. So that was the last point that my technical model would have allowed a plus R. What does plus R mean? The addition of risk. Okay, so I don't think in terms of buy, hold, sell, those terms are irrelevant to me. All I care about is how I manage my risk. I'm a risk manager. I'm not a trader, I'm not an investor, I've just managed my risk based upon my trends. So that was the last day we saw potentially for a plus R. How would we have traded it since then? I mean, if it did happen, if you'd never caught those 41 other times, what would you have done? Well, let's do some analysis. We've got some black candles coming in. Okay, we're beneath the trend ribbon. The trend ribbon is now unequivocally compressing and potentially about to transition. We're moving into a zone of lower peaks and lower troughs. And I know I've missed the exact low, but that doesn't matter. We can still see that we've got lower peaks and lower troughs. And these are all just words. Ultimately, what's happening is we're moving from a period where the demand side is very much in control of the price to a period where we're seeing more of the influence of the supply side. So D greater than S equals P going up. But if you increase the S, well, it starts to become equal to the D. Or if you reduce the D, it starts to become equal to the S. Maybe S didn't increase. Maybe D fell away, or a combination of both. It doesn't matter really, does it, ladies and gentlemen? I prefer strong trends. D is very much in control, and we're seeing something else. So for me, that creates doubt in my mind, and certainly if the price, and this is a very well-worn rule of mine. I mean, if I had, and it's really simple in its concept, if I had a reason to get in, and that reason is no longer there, then why am I still in? And that's, for me, it doesn't matter whether it's technicals or fundamentals. If you buy something because you thought it had great growth or, it had great momentum, whether it's technicals, and that reason isn't there, then surely there's no reason to be in. So for me, if this was the candle that got me in, closing beneath that candle would be a big no-no. So I would say something like close less than. If it closed less than that, then for me, I would have to get rid of the risk that I added on that day, and then I would go to ZRP, which is a zero risk position. And I think we know what's going to happen here. We don't have to be Nostradamus because we've seen the chart, but at some point, well, it actually didn't happen. It hasn't happened yet, has it? Until we get to, there we go. So this is the day here where we would, so I'm going to stop saying that, where I would officially minus R, but I think we're all grown-ups here, aren't we, when I say something like that? And therefore, and it didn't get any better from there. It's only really gotten worse, hasn't it? So that's my view on it. For you, John, is personally, I can't see a reason to have risk on it. Now, this is because, John, I'm a shorter term trader. I'm looking for more momentum type opportunities. I'm keeping my portfolio quite active. If I was a longer term investor or trader, I think those terms are interchangeable. Let me get rid of all of that stuff so we can see what's going on now. I'd be more likely to be looking at a weekly chart. I'd be checking the market once a week. We discussed this in detail last week. I'm not going to go back into it. And looking at this. But I'd also reckon, and I won't make a habit of doing this each one, because unless you ask specifically, Carl, please look at this on the weekly chart, because I'm more of a longer term investor, and then I'll happily do it. Otherwise, I'll stick to the daily charts, not because I'm assuming what you are. It's because I know what I am, and a lot of this, let's face it, is education. But we can see each peak is a point of supply. Again, that language always relates back to demand and supply. Each peak is a point of supply, and each trough is a point of demand. And if we are making lower points of supply, for me, there's really only one conclusion, and that's supply is building, or I should say, that the demand in the system that's been pushing up isn't as strong anymore, and it's just not able, even if supply is the same, it's just not able to overcome that supply. If we start to close beneath points of demand, well, the demand that was there buying has probably been consumed, it's been fulfilled, and there isn't as much demand left in the system. So for me, we've got some problems here on the weekly chart as well, but only in as much that the short-term trend appears to have been neutralised as far as I'm concerned, because it looks like this week, and this week's not finished yet. Make no mistake, that is a live candle. We need to wait for Friday. But if it closes like that on Friday, then we're beneath the short-term trend ribbon on the weekly chart now. So the long-term trend is still up. That's fine. But for me, I cannot proceed here in good conscience on the basis that the short-term trend has been neutralised and still work at a full risk position. And you see it just changed there. As I can see, my data is just updated. So as we've been speaking, the new data is coming from Medicus, and it's actually fallen since the first hour of the day. And we can see that candle looks even more sinister now, but it still doesn't matter because it's not close. We need to wait to the end of the trading session, which is the week in this case. So for me, this is how I would operate here on my longer term portfolio holding of Medicus. It would still be managing my risk. Okay. Now, whether I'm getting out a half or a third or more than that, I'm not even going to go into that today, because that's not what I'm about here. It's just about helping you understand the signals that trigger the requirement for adding, reducing or maintaining risk. So either way for Medicus, John, hopefully that's answered your question. The next offline request, and this is the only other one we'll do today, is on Audinate. And we may just pause here on the weekly chart for just a second and just respect the fact that Audinate was also doing very, very well until it wasn't. We see the first interaction here. Well, first we see the candles, don't we? Then we see the price action changing. And then we see the interaction with the trend ribbon. And then we see the trend ribbon changing. And then we see the trend ribbon going from offering dynamic demand to offering dynamic supply. And then the long-term interaction comes. So some of you may own Audinate right now and be looking at this going, oh my gosh, why didn't I know this stuff 2 years ago? It's okay if you didn't know this stuff 2 years ago, you know it now. Okay, so why can't you just start applying it now on everything else you do? When we go to the daily chart, it becomes even more obvious, doesn't it? And because we're on the daily chart, we get our signals earlier. They happen 5 times faster. So if we get rid of those, and I don't mean these to be, forehead slapping moments, but they often are, where we've got our candles, we've got our price action, and it's my model, but I don't create the candles, ladies and gentlemen, so don't get angry at me if the candles and the price action don't go your way. But I think it's pretty clear here that Audinate started having some issues around about, March or April 2024, and by around about here, and that candle there is actually a really nice candle, around about 25th of July 2024, that it was a ZRP based upon my model. So there was really absolutely no way that my model could have had any risk. In fact, it would have been well before that, because if I go here, I know you can't see it, 27th of May, was the first time I identified this as having problems. Now I'm looking at when I, in ChartWatch, identified this as having problems. It was the 27th of May. So that's all the way back here. That's really early. That's that candle there. That in ChartWatch ASX Scans, I told the world that Audinate, not only is it a ZRP, but it's potentially shaping up for a short trade. So as early as there, but certainly since then, I can tell you 46 times. 46 times I've run Audinate as one of my highest conviction downtrend opportunities. And it's up to the individual what they do with that information, of course. But I think the history has proven me to be pretty accurate on this. We can see here how the long-term trend ribbon, I always say don't mess with the long-term trend ribbon, ladies and gentlemen, because when you're in a downtrend, it tends to be very, very difficult to get back above it. And really only until the price does get back above it, can I show, not will I show, can I show? I'm not allowed to. I'm not allowed to. I can think anything I want about Audinate. I can think it's the cheapest stock in the world on that day, but I can't buy it. Oh, but Carl, it went up. Oh, okay, whatever. I still can't buy it. On that day, I could have thought it was the cheapest stock. On that day, I could have thought it was the cheapest stock. On that day, none of these candles from that point there allowed me any possibility to add risk. So this is, from here is a no add risk zone, right? I cannot possibly add risk from that point, okay? That's my rule. And that's where we are right now. So I can't possibly add risk on this. So Audinate, it actually, unfortunately for you, Jeff, or whatever, unfortunately for Audinate, and whether the universe turns this out to be the case, it did feature, I did even put it in as recently as yesterday, unfortunately, because the short-term trend is down, the long-term trend is down, the candles are almost exclusively black. How do you get a black candle pretty much every day of the week for 2 weeks? It's not because the world thinks that this is a bargain. And you might look at this, Jeff, and think, well, it's got great fundamentals, it's got revolutionary software technologies, adoption is growing, but everybody else knows that. They know all the things you know, and unfortunately, when it comes to the market, they probably know a bit more, and they're voting with their money, aren't they? And they're voting with their shares. So when they vote with their money, they want their money back. It's the same thing as, I guess, selling those shares. I must admit, Jeff, I don't know anything about the true fundamentals of Audinate. I do know what they do, of course. I don't know anything about their fundamentals, but I didn't know anything about their fundamentals for those 46 times either. Let us get to your online requests. Thank you, everybody, for being so patient. And I think we can pick up the pace a little bit now, given we've got some of these foundational concepts out of the way. CSL from Mike. Oh, we're going from bad to worse. Last week, I did say CSL, it might have been, might not have been last, might have been the week before, just counting the number of bars back. It doesn't really matter. I said something in one of these sessions like, look, for the first time in a long time, CSL is at a point where if I had it, not that I would have it, and I couldn't imagine any circumstance where I could have it, it's finally scraped its way back up to equals R, okay? And look what happened straight after that. Murphy's Law. But this is reinforcing this idea of, don't muck around with the long-term trend ribbon as well. I know it got above here, but you look at the price action very shortly after and the candles, and this rally was probably not very sustainable, not going to be very long-lived. And then you got that giant candle there. And I do feel, just from the press and some of the social media I was reading at the time, that this day was greeted with a great deal of enthusiasm by many investors because they thought they were getting something on sale. This idea of quality on sale. That they could buy the dip, and it's a quality stock, and if they hold on long enough, it will go back up to $300 a share. And that may still be the case. I'm not saying that's not going to be the case. I think that's very much how the mainstream tends to look at these situations. However, if we look at this situation through the lens of supply, demand, and price, what did that tell us? Well, on that day there, how much demand was in the system? Well, we have got a big black candle, which means that the price closed beneath its open. So it opened up here. It tried to go up. Can you see that? Maybe we'll zoom in a little bit more. And we can see that upward pointing shadow. And this is why, ladies and gentlemen, you hear me harp on about these upward pointing shadows so much in ChartWatch, because I say they point to, the shadows are pointing, so this shadow is pointing up, right? So this shadow is pointing to where excess supply is lurking, right? Lurking in the system. Excess supply is lurking in the system. Upward pointing shadows are pointing to where there's excess supply. For me, there's no other way to interpret it, because the price went up. That's how the shadow is formed. The price went up and it came back down again. Why did it go up? There was demand in the system from people thinking they were getting a bargain. The price fell from 270 the day before to 245 on the open, and people started to buying it thinking that, oh, here's a bargain, here's a bargain. Now, if you're a seller, a big fund manager, and you've got a lot of CSL to sell, the best time to do it is when all the mums and dads are rushing in. They've got lots of liquidity, you've got lots of demand, you've got lots of motivation, and the big fund managers came in and went whooshka. And it's not like they sold a little bit, because look at the volume. The volume was immense, right? They sold a lot, and they kept selling, and they kept selling, and they kept selling, and they kept selling. And the only thing that stopped them from selling was ding, 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 ding. The market stopped trading. And it was like, oh, darn it. I've still got a truckload, like, Barry, back up the truck, deep, 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 deep. I've still got a truckload of CSL to sell. And we can see this. It's demonstrated in the price action. The only thing that stopped them from selling more was the market closed. And where was the demand side in this? The demand side copped it and copped it and copped it and copped it all the way down. So it wasn't that there wasn't a lot of demand. There was a huge amount of demand from all the buy the dippers. But unfortunately, by the end of the day, those buy the dippers are now locked in, aren't they? They are locked in at prices ranging from 255 all the way down. And for many of them, have been put into a loss. And for many of them, they're now just going, oh, please God, if you just make CSL go back up to where I got in, I promise I'll never buy the dip again. And whether that's 230 or 235 or whatever it is, this is what the market is telling us. Now, the problem for CSL is that this scenario creates a huge amount of latent supply in the market, right, from people who really just want to undo their mistake. And it's throughout that bar. It's throughout that candle. When I say bar, I mean candle. Bar is another word for candle. Because before we had candlesticks, they were called bars. And we find that, you can see it here. Like I can't make this stuff up any better. But we tried to rally, buy the dip, everybody. All our stockbrokers tell us to buy the dip when quality's on sale. And we actually did try to rally here, didn't we? And then what happened? All of that latent supply started to work its magic again. And down we come. That latent supply. What does latent supply look like, ladies and gentlemen? It looks like this and then that. Lower peaks. Anyway, let's fast forward to the end. It actually started to go up, and to be fair, the buy the dippers, eventually the supply washed through the system. Those big fund managers sold what they needed to sell, and all that was left, I believe, were the buy the dippers. And then don't forget that this trend isn't just telling us about price action and candles, it's telling us about the fundamentals for the company. The price action tends to reflect those fundamentals. We know that. And then we just have more bad news. But what happened yesterday? Were people buying the dip? They didn't even try to buy. Is it fair to say that yesterday they didn't even try to buy the dip? I know some people would, maybe even some people listening today, live or in the recording, bought the dip again. But what did the market do? The market didn't buy the dip. And then we get a follow through today. So for a lot of people, they see things come down a lot and they go, oh, that must be cheap. For me, I don't think in those terms anymore. I don't think, oh, it's gone down a lot, it must be cheap. They're not bananas. When bananas are $10 a kilo and then they come down to $1 a kilo, they're cheap. Okay. If CSL comes down from $270 to $230, it's the right price, ladies and gentlemen. And if you take away one thing today, it's that statement. When bananas go $10 a kilo because there's a cyclone in Queensland, when they come down to $1 a kilo, they're probably cheap. But when CSL goes from 270 to 230, it's the right price. It's the price the market's determined. Do I even need to write on the screen ZRP? I don't think I need to. This is my position. This is the way I view the world. I cannot see even the vaguest resemblance of a reason to have any risk on CSL. If we go to the weekly chart, it's not like you couldn't see it coming if you're a longer-term investor for your self-managed super fund. And I'm not trying to be mean here. I'm not trying to be nasty. I'm just telling you what the candles say. Don't blame me. Blame the fund managers that make the candles. That's not where we're heading next. Mike's on a bit of a roll here. The next one is Wisetech, which I can answer by going ditto. And in fact, we did this one last week, or the week before, or the week before that, I can't tell, but I can certainly, I keep the markings, keep the scratchings on the charts. So minus risk, I told you, hey everybody, minus risk, minus risk, minus risk, minus risk, minus risk. So to be, what is it? To be forewarned is to be forearmed. And the charts gave us plenty of warning here. And as a bonus, I gave you plenty of warning in ChartWatch Live as well. How about that? So for me, you get a move like yesterday. It was obviously they've got some issues with ASIC and the AFR. Could I have possibly known that was coming? No, I wouldn't have a darn clue. But we do find that more often than not, when the trends are thus, bad news tends to break. How about that? Why? Because the market is anticipating this bad news coming out. Now, whether the market knew this specific instance, I can't say. I don't know. You might have your own opinion on conspiracy theory on that. Maybe they did. But nothing happens by accident here in the charts. Do I need to write on the screen? Some people might be wanting me to say, Carl, isn't Wisetech a bargain? Or maybe you want me to say, to tell you, Wisetech's a bargain, everybody. CSL's a bargain. I'm sorry, but that's just not how I operate. From James, Carl, I try to follow along, but I've noticed you have black and white or hollow candles rather than red-green. Oh, okay. Well, this is an easy one. For me, James, there is only black and white. That's the only candles you ever need to worry about. Please, please, please. And I know I can't give you general advice. I know I can't give you specific advice, James, but here's specific advice. This is not general, James. This is directed specifically to you and everybody else listening. Forget the reds, forget the greens, forget the hollows, forget the fields. Black candles should be black and white, ladies and gentlemen, and nothing else, because it's just about the supply and demand, pure supply and demand. I want to see visually, very quickly, black candles supply. And you might say, oh, Carl, the red ones do it for me. Okay, knock yourselves out. But I'm a purist. We have to remember that these were initially developed by a Japanese rice trader named Monohishu Hona back in this, I want to say, late 1600s, early 1700s. I'm pretty sure I got that date right. And I can tell you, back in those days, they didn't have red and green candles. They had black and white ink. Okay, so that's why I like it. It's just pure. And the reason why he made them these colours is because of the yin and the yang. So he understood. He was the first person probably in the history of markets, potentially even to do technical analysis, but who understood the true essence of technical analysis is simply interpreting the interaction between demand and supply. And for me, Japanese candlesticks are the purest form of technical analysis because they are just demand and they are just supply. And I don't know if you've noticed, but I absolutely love them. Let's go to Peter. And some people might say, oh, Carl, there's Heikin-Ashi and there's all these other, there's Renko and there's all these other point and figure, other ways of doing things. And yes, I say go and explore them and try them. I've explored many of them and I still just keep coming back to the simplicity of my Japanese candlesticks. Okay, we're on ladies and gentlemen, you are on a roll. We've got dominoes. So now I'd love to get to a chart with some green on it pretty soon. I know we look at Medicus, but even that was starting to potentially roll over. And then what's happening this morning, ladies and gentlemen? So we had CSL, which I have 39 times has appeared as a featured downtrend, my highest conviction downtrend CSL. Then we had Audinate. So you're doing tour de force of my most highest conviction downtrends, 46 times for Audinate, and then we had Wisetech, which is fairly recent to be fair, but now we're going to DMP, and what's my number on DMP? 61 times. I reckon this is my most featured downtrend. This has to be my highest conviction downtrend since ChartWatch began back in May over here. And, well, let's face it, that hasn't been a bad way to be. If you saw a bargain in that chart at any point in that red downtrend, I didn't see it. Now, the question is there a bargain afoot here? look, it's certainly turned around. And I think last week, so I'm one from two, aren't I, on these potential turnaround plays. And we can see that last week I also said that, look, it's the first time in a very long time, I think that if I squinted as hard as I could make a case for, if you had it, and there's no way I would have it, equals are maintaining risk if you had it, because of this candle here. Okay, I'm not going to talk about that candle again, but it's a big white candle, there's volume. Go and look at last week's recording as to why that was the case. One from two, CSL, obviously crashed. This one actually had a pop. So that's a pretty good strike rate, isn't it? 50-50. Not that I knew either news, and both of them were news events too. So the news event here is that potentially a private equity firm is looking at them, and it popped back up. Where did it pop up to, Peter? Like, I can't make this stuff up. It literally popped almost perfectly to the long-term trend ribbon, and that is where the upper shadow appeared, the upward pointing shadow, which means up here we have lurking this latent supply, don't we? This latent supply in the system, this latent excess supply in the system. So it actually becomes really simple for me on Domino's now. This is almost just binary. We know where the supply is. We know this demand. So we worked out last week that demand appears to be starting to come back in the system and soak up some of that excess supply, and or some of that supply, maybe it's just washed through. The fund managers that had it on their list of things to do to sell this thing, they've sold. And what's left is demand. I don't care why. It's none of my business. But that's what the candles are saying. So if that's where the latent supply, or there's evidence of latent supply, Peter, it becomes pretty simple for me. If we can take out that latent supply, number one, clearly there's enough demand in the system to do it. But number two, we've taken out that latent supply. So unless it's been replaced by other motivated supply, there's a path here for further improvement, which gets back to what I would do for this. Is this a plus R? Is this an equals R? Is this a minus R situation now based upon the news and developments? Well, let me do this. If I had it, and I don't have it, and I won't have it, and I still can't have it right now, even though it's improving, I can go equals R. I'm not a plus R yet, because I need to see further evidence that we're dealing with that latent supply. And you might say, hey, Carl, wait a second. If I wait for that supply to be taken out of the market, I'll be paying an extra $2 or $3. And I say, that's exactly what I'd be comfortable in doing. See, I don't care about the price. I don't care where I get in. That's irrelevant to me. People are always, I don't want to pay an extra couple of dollars. All I care about is doing the right thing based upon my model of having this confidence that the demand side is behind me when I'm buying, or the supply side is behind me when I'm selling. So I'm still equals R on that one. But if it makes you feel better about holding all the way through this, then potentially things are on the mend with Domino's potentially. Trading view ribbons, I'll tell you how to get those after we finish today's session. Mike, we're going to go to Peter and EDV. I'm not picking these, ladies and gentlemen. You can go and scroll up the list. What is going on today? Domino's was 61 times. EDV, if I type that in, is 35 times highest conviction downtrend. If you're looking for me to pick bottoms on these, ladies and gentlemen, I cannot. So even if this turns out to be the bottom, and we saw it on Domino's, I can never say to buy on that candle there, because all I have on that candle is evidence of supply side control. And charts will always look their worst it's the bottom of the bear market, and they'll always look their best at the top of the bear market. But things will develop to move the other way. So on that day there, happily ZRP on that day. Have I seen enough here to move me if I squint? And not that I ever would even contemplate owning this right now to equals risk. No, this is not even yet. So whilst I said, that CSL finally clawed its way up to an equals risk, if you're crazy enough to have it, and Domino's, even though it went up, still crazy enough to have it. I cannot get to equals risk if you happen to be crazy enough to have it here. There's just not enough evidence. So if you are telling me, Carl, there's plenty of evidence there that the demand side is in control of the price, we're looking at different charts. Personally, I'm still ZRP on this, but happy to entertain adding risk to this if it moves up to the long-term trend ribbon, if it starts to put in higher peaks and higher troughs, if the long-term trend ribbon transitions to amber. But more than that, because what did I tell you at the start of this, ladies and gentlemen? I said, don't mess with the long-term downtrend ribbon. I can't even contemplate adding risk until we're above that. So let's keep moving. I think maybe we can say, look, if there's really nothing to see based upon my model, then let's just keep moving. Let's get to some double greens. Simon's saying, why when buy or sell signal comes up, do you buy or sell on open or wait for the markets to settle? Yeah, that's a good question. Basically, if I see the signal, I like to check the markets just before the candle closes. You've heard me stress the importance of waiting until candle close. It's just a flexibility thing. If you have the ability to do that, then that allows you to get in. I mean, and when I say before the candle closes, I'm talking about the last 15 minutes of trade, okay? And then leaving that action as late as possible so we've got as much confirmation. If that sounds too complicated to you, then for me it's just doing it at the end of the candle, doing your analysis after the candle and setting up your orders at the open of the next trading session. Typically, you can buy at any stage of the next session. It's quite irrelevant, but looking for any sign of positive momentum if you're able to be there. If you're not able to be there, then it's just setting up an order with your broker for the next day. It really is trying to keep it as simple as possible, because I think you can over finesse these things. At the end of the day, a signal is a signal, and one must back their signals. It's really as simple as that. So, Simon, I would say don't overcomplicate it. If there's a signal is there, then we're happy to go. And I've given you a little bit of insight into how I prefer to do things, but that's based upon my ability to do so. Let's go to Rebecca's got, Carl, could you explain the candle setup when you class a position as qualifying on the featured list? Okay, so the featured list is simply, long scans for longs, long as we think something's going up. I'm not going to show you the criteria I use, but ladies and gentlemen, they are based upon the stuff I teach you here. Those trend ribbons are the key driving factors behind the results that you're about to see. It's going to scan every stock listed on the ASX. Okay, so this is, and I'll show you what this means in, we'll let that go. I can show you what this means. I'll list here for illustration purposes, but imagine this wasn't the ASX 300 list, this was every stock on the ASX. So that scan, the algorithm is looking through and it's just showing me stocks where the moving averages are doing the right things, okay? Now I could do that manually, like I showed you, and I'd get through the list pretty quickly, but it'd still be a long waste of time. And then what I do, once I have a short list, I save that into a watch list, and then I will literally do what I just showed you. So for example, when I do these scans each evening for you, and I set them up for the next day, this is how fast I go through. So that obviously has got a candle today, but yes, I didn't have that candle, so that would have got shortlisted, and it did. In fact, it did. No interest there, no interest there, no interest there. And I might come back and I look at that very quickly, but no, that one's under takeover, so I'd keep going. No, yes, obviously. No, oh, that one went in yesterday and I still think that's fine. No, yes, no, not today. No, yes, no. And each time it's a yes, I right click and I put it in the list beneath it. So it goes into shortlist. Now there's nothing in that shortlist. So you're looking here, there's nothing in there, right? So that's how fast I go through. How can I do it so quickly? Because I've been doing this for a long time. I know exactly what I'm looking for. What am I looking for? It's not just moving averages now, because for the most part, the automated scan has done that. I'm looking at price action. I'm looking at candles. I'm looking at the cleanliness of price action. I'm looking at the cleanliness of candles. I might be glancing down here to volume as well. And it's the decision I can make very quickly because my brain has got a template of what it wants to see. If my brain doesn't see the template, it's on to the next one. If it does see the template of what I want to see, it gets dropped into this list. And that's the list that goes out in ChartWatch ASX Scans. So I give you the broader, I've eliminated 90% of opportunities straight away, but I might give you that broader list so you can go through and say, okay, well, these are the ones which Carl thinks are invalid uptrends. These are the ones that he would based upon his experience, be happy to add risk to. And then I go through the shortlist and I do it one more time, and they drop into this list, and that becomes my feature list. So from that shortlist, I shortlist again for what I feel are the strongest of the strongest. Now, that doesn't mean they're going to be the best. I don't know. I can't tell the future, but I feel they're the strongest based upon my experience and my model. Okay, so that's how it works. We'll end up going from 2,500 stocks to maybe 20 stocks that I think are showing the strongest signs of excess demand, and flip that for the short list. When I say short, I don't mean short as in not long. I mean scans for short. So you can see up here it says long scan. There's also a short scan, which you'll see pop up here. And I don't run this over the whole market because we can't short the whole market. When I say short, I mean short sell. So this I tend to run just on the All Ordinaries top 500, and then it'll run that list, and I'll run that again for you. Do the same thing for the shorts, and that's how I come up with CSL. That's how I come up with Wisetech, and so on and so forth. So I know I haven't answered anybody's stock-specific questions there, but I think it's important to also give you a bit of an insight into how ChartWatch ASX Scans works for you each day. Mike's got AGL and Woolworths. How are we going for time? Terrible, as usual. Apologies, as I usually do at this point in time, is where I apologise for not having answered more of your questions, but hopefully you're still enjoying the content. We'll do 5 more. And we'll do 5 more after these two, because these two I can do quite quickly. And which I don't know what's happening, again, ladies and gentlemen, we seem to be transfixed with these downtrend stocks. AGL, however, doesn't look awful because we've got a short-term uptrend now. At least the price action is trying to fix itself. And actually this candle here is very interesting for me, and the response to that candle is quite muted. So strong demand side push, very little supply coming back in not a great market either. So yeah, for me, you can see here, maintain risk position. That's one of the earlier webinars where we were using that nomenclature, and we've since changed that maintain risk position to equals R, because I think we all agree equals R is far easier to understand. Happy to continue with maintaining risk on that one if I had it, but would I own this? No. Personally, me, no, because it clearly hasn't done all the right things. And then we're going to go to Woolworths. Which is a ditto, but some improvement there. And let me say that if today's candle stays the way it is, it would need to close there or better. If I had it, which I don't, and there's no possible way I could, because you know my model, and I squint really hard, there's a possibility of equals R. But no, for me, no, it would not be my portfolio. Now, this is what I'm going to do the final 5. We're going to go down to the bottom of the list, so people who maybe came a little later have the same opportunity as people who got here earlier. I know that seems unfair, because if you're lining up for tickets for Metallica, it doesn't work like that, but I ain't Metallica. Marvin saying, hi Carl, love your work. Thank you, Marvin. How do I get access to the charts on a daily basis? Head to marketindex.com.au and find the ChartWatch section. That's where they are. Let's go to point of view on Westgold Resources, WGX. So after this, there'll be 4 more to go. And this one's for Danique. Okay, so everything's going gangbusters until that day there. On that day there, I'm happy to be an owner. Okay. Oh, Carl, but that was the top. Why didn't you pick the top? I'm sorry, I can't tell the future. I can't know until the market starts to give me signs that supply is coming in to take control. What are some of the signs that supply is coming in to take control? Lower peaks are a sign. Cracking through troughs. Now, unfortunately here, for Danique and for me and for many other traders and investors that had exposure to this gold theme or critical minerals themes, the turnaround was so quick. In most cases, there was absolutely nothing you could do as a trend follower, right, following a trend, to prevent giving back at least some profits. And then it really came down to whether you had signals. Some of them, just like this, these candles aren't terrible, and maybe there just weren't any signals. Some of them had great signals, and you could have got some risk out quick. So before that, I think we also need to draw in little peak trough moves. So certainly one there, and one there, and I'm not being pedantic on these, really just trying to pick out the big A shapes and V shapes. And for me, I do have strict rules around the price closing beneath points of demand, because in a healthy uptrend, that really shouldn't happen. And there was actually a point of demand here formed there. So potentially, there are minus R's coming in here. So, for example, a minus R there. On that day, even though the candle is good, you still need to consider this gap comes into play, and overall it is a concerning candle. And look, if you did it on that day, I wouldn't complain. If you wanted to give it one more day because the candle was okay, that would not be a problem either. And then we start to get into something like that, and even that now is starting to be a problem for me, because we are in we're in a bona fide downtrend here. So these are just places where I'd be looking to manage risk. I know that doesn't help you now, okay, but it gets me to a conclusion where I would say that. And this one, I can tell you, was frequently in the uptrends list, the feature uptrends list, WGX, I can tell you, where it started going in around August this year, and it had a pause through here, obviously, but it started going in on the 1st of September. So here it's that candle, it's pretty obvious, isn't it? You can see the candles where I had risk. So if you're getting in around here, when it started going back in, you can see the goal is to come out ahead, not to get the top. It's to come out with as much of the trend as you possibly can. That's my goal. It's not to buy it at the bottom. It's not to get out at the top. It's to capture as much of a trend as possible and then go and find the next trend. Do the same thing and the next trend. Some of them you won't capture any, you'll lose. That's okay. My job is to find the next strong trend and capture as much as possible. For me, this is close to ZRP, as in I'm off to find the next trend. At most, I could see, on the basis that the long-term trend is still solid, a case for maintaining a small risk position, an order of magnitude here. And this is what I would do. You do anything you want. If I started with 1,000 shares, it might be as little as 100 shares. Just some skin in the game. So that if it starts to realign with that long-term uptrend, there's every chance it can, I've still got a bit of skin in the game, and therefore I'm in a more positive frame of mind to continue to add risk if need be. But order of magnitude, that's where I'd be. For me, honestly, hand on my heart, I'm probably here just for now, because there's still plenty of other things there I want to do. But that's me, and you can do what you want to do, of course, but this is what the demand supply is telling me, okay? And I don't know what's going to happen next. It could go straight up tomorrow. A2M looks solid. We've seen so many horrible charts today, and this is a very solid one. So happy to do this one. Short-term uptrend, long-term uptrend. The price action looks decent. Okay, I wouldn't call it excellent, because it's still ultimately hovering, rotating, compressing, if you will, beneath this major point of supply. And this is a major point of supply. There is a substantial amount of latent supply in the system, and that's why the price is compressed from what ultimately was a fairly confident demand side market before it. Why here? I think $10 is having a little bit of an influence. Some people looking to take profits near that round number. But as long as the candles continue to stay white, the price action is good. Really, I'm more than happy here for an equals R, and we can see how the spectrum of my views change depending on the charts. But I could also go so far as even plus R if I saw the right candle. And let me give you another acronym. I was going to say next demand side candle, next demand side candle. If you read my work, you know what a demand side candle is. It's a white body, longer the better, or downward pointing shadow. Today could be it, actually. I mean, today could be that next demand side candle. We won't know until it closes. But a strong demand side showing closing, and I'll give you a level here. That high there, 960. So really sort of 960 and above would give me enough indication. Think about what that would mean. If we had, and I'll give you a visual cue here. So if we had a nice white candle, I know that's not white, it's going to change color in a second. So if we had this as a visual cue, right? And let me just move some of these out. So if we had that, what is it telling you about the latent supply at this point? Is it telling you that the latent supply is still powerful and impacting the price action? Or is it telling you that the demand side has accounted for that latent supply? So this is why I don't wait for breakouts, ladies and gentlemen, and this is what you're going to read in every technical analysis book you'll buy for $30 at the bookshop, and it says it's a section on breakouts. I don't do breakouts. I think waiting for a breakout is a total waste of time. I do price action. I do candles, and if I can see that there's strong evidence that the supply, because the technical analysis books unfortunately don't talk solely in terms of supply and demand, yet I do. If I can see that supply that the market has been contending with for months now has more than likely been consumed, and the white candle will tell me that, strong close, then why wait for the breakout? Like, what are you waiting for? So let me reiterate, that's not there yet, but that gives you an illustration of what I'm waiting for to potentially add risk, but certainly maintaining risk at this point in time. I think I've got 4 more to go. Pack saying, hi Carl, you authorised me for trade ribbons. I'm not going to answer any trade ribbons in session. I'll try and get to them after session. Robina saying, love your ribbons. It's the light of my week. That's very generous of you, Robina. Can you have a look at MEI? I certainly can. And this, I suspect, is going to be, actually, we had a bit of warning on this. I was going to say this might be one of the ones where we didn't have a lot of warning to manage risk. And we did have, unfortunately, we did have a little bit of warning here. Not a lot, but more than some. So we have our point of supply. We ended up with our lower point of supply, and we wouldn't have known that it was a lower point of supply until that candle there. Okay, so that black candle creates that point of supply. On this day here, we don't know it's a point of supply yet. We're still heading up. But when we get to this candle with the lower high and the lower low, that's when we know that point of supply is in place, and it's lower than that one. So that's our first warning. Not a reason for me to do anything on that day, but it's certainly a warning because there's still every chance on that day with the strong trends in place and the strong price action before that it just keeps going up. So that's my first warning sign. But what we can also do, I think, is peg our point of demand in here. And ideally, we don't see the demand at that level be consumed. So we don't want to see it close beneath that level. When I say consumed, if we've closed beneath that point of demand, the demand that was there before is consumed. It's not there anymore. Doesn't that worry you? Well, it worries me. If I'm worried, I start to reduce risk. I mean, that's the simplest explanation of it. So for me, that's a clear minus R signal there. Close beneath the short-term trend ribbon would be next, and we haven't done that. So I can see a path to having some risk on this, but it would certainly be a substantially reduced risk position at this stage. I don't want to be in a situation where I fall prey to, and I just want to, I know I'll find this at some stage, maybe not. We could be in something like this, okay? And that's why it's still valid, based upon my analysis, to have some risk. But I was trying to find the one where it just flashes and then it goes straight back down again forever. And it's actually not in that chart, to be fair. But that's what I'm gunning against by not having a full risk position. And if this is confusing some people, Carl, just bloody well tell me, are you in or you're out? Okay, this is how my model works. I don't like to get all in, and I don't like to get all out. I like to have a foot in both camps. Carl, you're hedging your bets. Yes, I'm hedging my bets based upon what the trend is doing. But I guarantee I'll be all out if I'm convinced that the supply side is in control of the price. Operating, let me say, at a substantially reduced risk position on that one. But happy, if you will, to keep some skin in the game. But Carl, MEI, it's doing this. I have to keep reminding you, I don't care. I have absolutely no care in the world for what they do. Please understand these are just pixels on a screen to me. What they do is completely meaningless. And my history on them are completely meaningless. If I lost money on this particular stock last time I traded it, I've programmed myself not to care. If I made money on this stock the last time I traded it, I've programmed myself not to care. Just give me the next damn good-looking chart. Okay, let's go to, I think I've got 3 left to go. Jackie saying, if you change or update your trading for your ribbons, no, I'm not going to, it's about ribbons. Do you need double green ribbons to buy a turnaround situation? No, turnaround setup, which we've discussed a few times here. What's a good example that I can give? I think MP1 did a good turnaround setup not that long ago. Yeah, look, I mean, we can get the start of it at least. And I know it didn't keep going straight up after that, but it certainly popped. But for me, that's the turnaround setup. So no, we don't need double green ribbons, but we certainly need the short-term ribbon to be green. That's a must. We need the price action to be rising peaks and rising troughs. So this is a very early and a very aggressive mode of entry. Hopefully you appreciate that. And we need to see the long-term trend ribbon is at least amber, cannot be pink. Okay, good price action, and preferably one test into the ribbon and then move out of the ribbon. One test into the ribbon, move out of the ribbon. So that's textbook that I can remember, and a predominance of demand side candles. Okay. I was going to go into some other stuff, but I think that's sufficient for now. So that is the turnaround setup. Okay, doesn't matter what happened next; it's irrelevant. It did end up being the turnaround ultimately for MP1, but it is relevant because we talked about these, didn't we? You made me talk about these all bloody session. So the relevance then becomes, well, the turnaround setup is relevant because it's kind of giving you an insight as to when I can buy Domino's, when I can buy CSL, when I can buy Endeavour. And so I actually should be very, very grateful to you, Claude, thank you, because this actually will finish us off on a really, really, I think, powerful note where we say, okay, I don't like those things now, but it doesn't mean I'll never like them. I'm not allowed to buy them until I can see that the long-term trend ribbon has been dealt with. The latent supply that exists there has been consumed. Remember, don't mess with the long-term trend ribbon. Thank you for that one, Claude. I think I've got 2 left. Let's do one for Ryan. We'll do your IPX, which is that one. And yeah, a little bit of a ditto, unfortunately, on some of these ones that we're doing very well. But unfortunately, and you can see here, it's all the same stuff. If I am something, I am consistent. So we're going to say many of the same things here. But it's not until we consume the demand that existed there and there. We obviously made lower points of supply as well. These are things now that hopefully are becoming very, very clear to you. So for me, that's my first point to manage risk there. And very much here, I'd be struggling. In fact, this one here is a double minus R because we closed beneath the short-term uptrend ribbon as well. So the fact we've got lower points of supply, we closed beneath the point of demand. We've got some really strong candles here as well. I can add, they can be added to. So double there, and this is the last candle. This after that candle, for me, that is such a strong sign that the supply side is now in control. Because look what's happened. We've come back up. We've tried to get back above the short-term trend ribbon, and we've had a clear-cut move back beneath it. So that's where I personally would be ZRP. Now that's, I know people might think, Iperionx, I'll never sell that one. It's going to go to $100. Okay, that's fine. I don't know, maybe that means you're more of a long-term investor, but I think you've got some issues there as well. But we're only here for my view. And I know I keep saying it, but I unfortunately have to keep saying it. Weebit Nano was in yesterday. This is a nice place to finish us off today. I think I put it in 100%. I went on that day. Then where did it go in next? Certainly on that day, certainly on that day, certainly on that day. And you would have said, well, that wasn't a very good day to put it in, but I think still vindicated. These are all features, no doubt, for Weebit. In fact, no doubt it was a feature there as well. This is a nice place to finish because I know that today's candle, let me get rid of those. I know that today's candle is far from ideal. It is not a strong demand-side candle, but it's far from a strong supply-side candle either. Yes, it's black. Yes, there's an upward pointing shadow. Yes, there's some supply in the system, some excess supply in the system. But if we compare the amount of excess supply that seems to be creeping in today, and today is not finished, it's very modest compared to an overwhelming demand-side skewed market, isn't it? This is a picture of demand-side control, apart from one candle that isn't even closed yet. So on that basis, I therefore have absolutely no choice but to be equals R, and on the next demand side candle continuing, if I have the ability to do so based upon my portfolio management model, I think this is the best place to go out of all the universe of opportunity, continuing to add risk also. But we're not there yet. So on the next demand side candle, adding risk, it's not now, but certainly maintaining the risk that I have up to this position. There's absolutely nothing in here that's indicating that I should take any risk off the table on Weebit Nano. Really interesting. And we can see actually the turnaround setup. There you go. So, well, look where I started to put it back in. It's the turnaround setup. It's the turnaround setup. It's the interaction with the long-term trend ribbon. And before that, no interest. Now, did I get in on this day at the low? I mean, if you bought on that day, ladies and gentlemen, you are a genius. You don't need to listen to me. If you bought on that day, but if you knew on that day that it was going to go, and that was the low, based upon those technicals, You're not just a genius, you're Nostradamus. And on that cheery note, let me tell you about the trend ribbons that everybody's been asking about by heading back here. So I'm absolutely delighted to share with you my trend ribbons. You won't get the code, you won't see what's under the hood, but you will get to use them, and that's brilliant. You just need to fill out a form, which if you're listening in the recording, will be in the description of this video. Okay, so head down to the description. There's a link to the form. Fill that in, and we'll send you the ribbons. Some people have failed to put in their name. I don't deal with anonymouses. If you don't put in your name, I'm not going to send it to you because I want to know who you are. Otherwise, if you did enjoy today's session, it would be great if you could hit the thumbs up button. That certainly helps us climb the YouTube algorithms and get the message out to more people. Hopefully we can help them become better investors as well. Of course, hit the subscribe button, get notifications for every time we release a new video. Apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you today. Hopefully you enjoyed the session. I certainly did. Hopefully you learnt lots. And you can actually go off and do some of this analysis on your portfolio right now. All the best with your trading and investing until we catch up again. Bye-bye for now.